So I want us to do August 2023. That is last sitting. August 2023. This is question number, which one? This is question 3. Page number 2. Page number 233. Cynthia, which pages do you skip for which one?
I have just joined.
And not see, it's just like 5 minutes past class. Is when we are starting.
Okay.
Did you watch the video for the introduction? But I think you were in the previous class before power interaction.
No, I didn't.
But did you watch the video?
Yes.
So I can only watch the introduction, then you are good to go. So it's when we are starting. We want to check August 2023 question 3. That is last setting. So be ready there. So you are ready and you will allow me to read. This being first illustration, I will try to moderate the speed. PICA Limited, a public limited entity, intends to expand its operations by acquiring investments in other entities. On 1st of November 2022, PICA Limited acquired a 75% equity interest in Sheba Limited under the following terms. So before we proceed, have this, we have just started. PICA, so PICA acquired 75% in Sheba. Have that. So meaning for consolidation purposes, for consolidation in Sheba, PICA will be taking 75%, while Sheba will be, while NCI, non-controlling interest will be taking 25%, the remaining. Remember, the portion which has not been acquired by the parent. So parent here is PICA, because parent is the acquirer company. So they acquired 75%. The portion which was not acquired in Sheba is given to the non-controlling interest. Have that. So under the following terms: 1, an immediate cash payment at a fair value of shillings 13 per share on 1st November 2022. So what they are paying is called the purchase consideration. So they were paying cash of shillings 13 for every share. Okay. An issue of 3 ordinary shares of shillings 10 per value in PICA Limited for every 5 shares acquired in Sheba Limited. The fair value of PICA Limited was shillings 13 per share at the date of acquisition. The shares issue has not yet been recorded by PICA Limited. On the same date, PICA Limited also acquired a 30% equity shareholdings in Amua Limited, paying shillings 24 million in cash. 30%. When you acquire 30% in another company, if you watch the video until the end, if you acquire 30% in the group, No, that one even we mentioned before completion. In the group, that company, AMWA will be treated as which entity in the group? An entity where you have 30%. How do we call it? How do we call a company where the parent has obtained 30% shareholdings? Somebody? Done? Good. That is an associate. Yes, that is an associate. So associate is an entity where you have small shareholdings. You don't even consolidate for it. You only bring your investments. Good. The following draft statement of financial position as at 30th April 2023 relates to Pika Limited and Shiba Limited. So that is their balance sheet. Let's not read everything in the balance sheet. It will be a complete waste of time. Additional information. At the date of acquisition, the fair value of Shiba Limited net assets approximated their carrying values, with exemption of plant whose fair value exceeded its carrying amount by shillings 10 million. That is revaluation. When the fair value is the market value. So when the fair value is more than the book value, then that difference is considered to be revaluation. The plant had a remaining useful life of 10 years at the date of Shiba Limited's acquisition. The plant is being depreciated on a straight line basis. The plant is still carried at its carrying amount in Shiba Limited financial statements. So I will just add it so that we recognize the revaluation. No fair value adjustments were necessary on the acquisition of investment in AMWA Limited. Okay? It means AMWA there was no revaluation. When you are told there is no fair value adjustment, it means there was no revaluation. Note number 2, on 28th April 2023, Shiba Limited sent goods at an invoice price of 7 million to Pika Limited, which Pika Limited neither received nor recorded until 5th May. Shiba Limited had marked up these goods by 25% on cost. So those ones were goods in transit. Those ones were goods in transit. And we will compute what we call unrealized profit, because they expected some profit, but the goods had not been received the other side. So we shall check the unrealized profit. The agreed trade payables recorded in the books of Pika Limited before the above transaction were shilling 6 million. Fine. So they had debts between themselves of 6 million. That intergroup debt should be subtracted from both payables and receivables during consolidation. Pika Limited's policy is to measure the non-controlling interest at fair value at the date of acquisition. For this purpose, the directors of Pika Limited considered Shiba Limited's share price of shillings 12 per share to be appropriate. So where minority NCI has to be measured at fair value, which method are we going to apply to determine goodwill? Determination of goodwill depends on NCI. So which method are we going to use in goodwill computation? Correct. So Olivia, we are going to use the full goodwill method. Full goodwill method means you calculate goodwill for parents and goodwill for the non-controlling interest, then you add the two. Number 4, impairment test performed on 30th April 2023 revealed that goodwill on acquisition of Shiba Limited had not been impaired. But due to decline in sales of AMWA Limited, the value of investment in AMWA Limited had been impaired to the extent of 2 million. So goodwill of the subsidiary, Shiba, Shiba is the subsidiary, was not impaired. But our investment in associate, they are saying is impaired by 2 million. AMWA Limited reported a profit after tax of 4 million for the year ended that. Fine. Assume all profits and losses for the 3 companies accrued evenly throughout the year. Evenly means proportionately. Proportionately means equally. Equally means uniformly. So it means they were, that note is not even very important. Required, A, calculate the value of goodwill arising on acquisition of Shiba, 4 marks. Determine the value of investment in AMWA Limited as at 30th April 2023, 4 marks. prepare a consolidated statement of financial position for Pika Group as at 30th April 2023, 12 marks, total 20 marks. So let's start with goodwill computation. And here we are going to use the full goodwill method. So full means to determine both NCI and parents. So A, goodwill. Goodwill on acquisition. Goodwill on acquisition, Shiba Limited. All right, so how do you calculate goodwill? So have here shillings in thousands. Shillings in thousands. So you will start by saying purchase consideration. Purchase consideration. Purchase consideration is what you pay to acquire that company. What you are paying to acquire. So let's read paragraph 1, not one, paragraph 1, where the question started. They said, Pika Limited, a public limited entity, intends to expand its operations by acquiring investment in other entities. On 1st November 2022, Pika Limited secured a 75% equity interest in Shiba Limited under the following terms. 1, an immediate cash payment at a fair value of shillings 13 per share. So there was immediate cash. So the cash is shillings 13 for every share. I'm seeing some reflections here. So let me play with lights kidogo. Yes. So there is immediate cash. So cash is shillings 13 per share. But you see, parents acquired 75% of the shares. So take 75% of the shares in Shiba. So Shiba, go to balance sheet down there, you check the shares ordinary. So ordinary shares of Shiba, you can see 80,000. I hope you can see that in the balance sheet under equity. You can see shillings 80,000, but you see 80 to get the number of shares, you divide by the par value. Par value is 10 to get the number of shares. So they acquired 75% of the shares, but each share they are paying shillings 13. That is what we have been told. So for every share acquired, they were willing to give out shillings 13. So can you multiply this and tell me how much they paid in cash? How much did they pay in cash? Somebody? 78,000. So bring here 78. They paid 78,000. Then again, they gave them something else. Bullet 2. An issue of 3 ordinary shares of shillings 10 par value in Pika for every 5 shares acquired in Shiba Limited. So again, they gave out shares. Acquisition, you can even acquire through shares. So shares, they are saying they gave out 3 ordinary shares of shillings 10 par value in Pika for every 5 shares acquired. So they were giving 3 for every 5. They gave out shares 3 for every 5 acquired. But they acquired how many? They acquired 75% of the 8 divided by 10. And the price, what was the market price? If you read that note, the market price was 13. So they issued 3 ordinary shares for every 5. 3 for every 5 acquired. But you see, they had acquired 75% of the 8. So 3 for 5 times 8 times 13. How much is that? What do you get? Median 46,800. 46,800. Then you add the fair value. This is full method. You add fair value of NCI, the market value of the minority shareholders, because they said minority would be measured at fair value. So check note number 3, additional information number 3. Pika Limited's policy is to measure the non-controlling interest at fair value at the date of acquisition. For this purpose, the directors of Pika Limited considered Sheba Limited share price of shillings 12 per share to be appropriate. So it means they are getting, minority were entitled to 25%. So 25% of the ordinary shares of Sheba. So ordinary shares is 80 divided by shillings 10. We divide by 10 to get the number of shares, but for this purpose, they said shares were shillings 12. That's what they are saying. Shares were shillings 12. So the minority will be interested in that portion. I'm just moving with what examiner is saying. I'm not complicating issues. So how much? $24,000. Thank you. Therefore, the total purchase consideration, having taken minority into account, is this plus this plus this. Can you add and tell me how much? Add the 3. The 3 comes to 148,800. 148,800. Then you less net assets acquired. So net assets acquired, when we talk of net assets, I told you the other day, net assets are the equity components, ordinary share capital, share premium, retained earnings, and revaluation. Those are the equity components, and you check them on the date of acquisition. So you come here and say, ordinary share capital. Can you check the ordinary share capital in the books of Sheba? In the book of Sheba, ordinary share capital, you can see 80. Shares will not change. So it's assumed that is what was there by the date of acquisition. Then you just go to equity, you pick those items under equity. So retained earnings Retained earnings. Retained earnings, you consider the retained earnings of the date of acquisition. Goodwill is computed on the date of acquisition. So when you check paragraph 1, where the question started, Sheba was acquired on 1st November 2022. If you check our financial year, kindly check the financial year keenly, it is ending on 30th April. 30th April 2023. That is when our year is ending. For a year to end on 30th April, it means it starts on 1st May 2022. Like that. 2022, yes. So Sheba was acquired on 1st November 2022. 1st November is somewhere here. 1st November 2022. That is when Sheba was acquired. It was acquired somewhere here. So when calculating goodwill, goodwill is computed on the date of acquisition here. So it means you need to check the profit on that date, not the one in the balance sheet, on that date. And somebody will ask me, now, when you need shares, which you put in the balance sheet, most ordinary shares, they don't change, they're just constant. But retained profit brought down current forward profit and revaluation keeps on changing. So you consider those two, make sure you consider on the date of acquisition. So the examiner did not provide that profit, but if you check equity keenly, please check equity, it can help us to get. If you check equity, there is retained profit as at 1st May 2022. 1st May 2022, they are saying profit was 12,800. But you see, we want it in May. Then for the year ended 30th April, 10,800. So for the year is this one here, from here up to there. So for the year is 12 months, from here to here, 10,800. So it becomes very simple. It becomes simple. To get the profit on this date, hapa katikati, you will take 12,800 plus 10,800 times the number of months from here to here. How many months? From May up to November. How many months? Count and tell me how many months. So your portion, you take 12,800 plus the proportionate of profit from here up to here. How many months are those? Only 7 months. Only it can
6 months. 6 months.
Yeah, those are 6 months. From May, May, June, July, August, September, October. November, you don't include November because it is past. If it went to 30th, then you include November. So those are 6 months. So you multiply by 6 over 12. So it is 12,800 plus these 6 months. So 6 months, you know, the 10,800 was for the whole year. A whole year is 12 months. So you just take this portion. Can you give me the total? So 10,800 times 6 over 12 plus this. That is the profit on the date of acquisition. Help me that one. $18,200. So this one is 18,200. Thank you. That is the profit on the date of acquisition. Bring it here. 18,200. I hope you have shown you are working somewhere how we are getting the 18,200. That is the profit on the date of acquisition. They were not giving us clearly, but they gave us the opening, then during. So I can prorate to get that one there. Very good. Then there was revaluation. There was revaluation. Revaluation is also part of net assets. It's part of equity. Revaluation was mentioned in note number 1. Check note 1, additional information number 1. At the date of acquisition, the fair value of Sheba Limited net assets approximated their carrying amount. carrying value, with the exemption of land whose fair value exceeded its carrying amount by shillings 10 million. Full stop. So those are the total net assets. So can you add for me this net asset, then we subtract. The difference is goodwill. $80 plus 18 plus 10 comes to how much? If you are taking too long to give the answers, it will drag us behind. 4,600. 4,600. So you subtract. The difference is goodwill. So how much is goodwill? Brian, Dan, Linda, Maria, Mary. Teresa, I want to see you giving me answers. Mwenyamaza sana. Brian is saying the net assets should be A. Naniata umendanganya 4,600 is the goodwill. So this other one, Olivia, we ushakipia paka huko kwingine. Hata mimi, surely 80 plus this one cannot. How can 80 plus this be 40? So Brian 108, 200. So goodwill is the 4,600. Wow. So we are done with Roman 1 of the question. So how is this marked? So this one will be 1, 2, 3, 4, 5, 6. Hapa inakuanga any two at 2. I know. Any 2 correct entries times 2 marks. You get the 4. Na hiyo mwanafunzi alikuwa anapata yote, and I can tell you where the student will get. Usione ati ni ngumu. Watu watapata hizi vile unaona, ordinary and revaluation. People who don't want to stress themselves, they'll get ordinary and revaluation, those two, and they will get the entire format. Correct. Any question before I go to part 2? Before I go to part 2. If no question, but by the time for the third question, computation of goodwill. You'll be used to it. All right, so let's go to Roman part B of the question. Part B. Part B, what did they want? They wanted determine the value of investment in Amua Limited. So value of investment in Amua Limited associates. Remember, this is associates. That is associates. Associate is just a company you have small shareholdings. Between associate is between what percentage? Someone? Associates, the parent is having what percentage of shareholdings from what to what? 20 to 49%, correct. So this is associates. So associate, unaona msifikirie sana ati hii ni serious. Ukiwa na shares hapa KQ, if you have shares in KQ, that is an associate entity. Ukiwa na kama 20% shares. So that company you don't even consolidate. Huwezi pigia KQ at today I'm preparing my books. Tell me how many planes you have. Hence you only have 20% of shares. You just check, I invested this. How much profit did you make? We made a profit of 1 million. You take your 20% of 1 million, you increase your investment. So it will be shillings in thousands. Shillings in thousands. You start by saying original cost of investment. So you check what the parents initially had invested in that company. Have they said? Check paragraph 2 of Ukoju up there. How much? I want to check from your side, just to ensure we are together. How much did parent pay? Check paragraph 2 where the question started. You will be able to see something there. How much purchase consideration did parent pay to acquire Amua Limited? Check and tell me the figure. You will see it somewhere there. Brian, they paid 24 million, correct, I agree. On the same date, they are saying on the same date they acquired Shiba. On the same date, Pika Limited also acquired 30% equity shareholdings in Amua, paying 24 million in cash. So 24 million. We are working in thousands. So that is 24 million. So bring there 24 million. Then any moment they make profits, wakipata profits, we top up to our investment. So you add post acquisition. Kindly mute yourself with that. Post acquisition profits. The profits they made after we acquired them. That is, I just want you to see there, because there's reflection there. So you add post-acquisition profits. Post-acquisition profits is the profit they made after acquisition. So check note number, I check which note for the profit of associates. Then let me most. Which note do we check in regards to the associates' profit? I want it to come, note number 5. Yes. Amua Limited reported a profit after tax of 4 million for the year ended 30th April 2023. So parents will take 30% of that profit. 30% of, they made 4 million. But you see, 4 million, they made for the whole year. But Amua is only 6 months. You see, they said the same date that one was acquired. That one was acquired in May. So here we saw 6 months. So you only take the profits from here to here. The 4 million is for the whole year. So you only apportion. That is why they were saying profit was even. So you only apportion from this space to this space. So you say times 6/12. So give me that one there. 30% of what and 6 months. Olive, 600. Then, so this is our investment in that company. So assuming ni KQ to invest, mnakumbuka KQ kuna time, the customers walikuwa nakimbia, I don't know what was happening, even they reported serious losses. So when customers are running away from the business, it means the goodwill of that company is in a yumba. The goodwill is not stable. When goodwill is not stable, it means the company is impaired. So that impairment, ukitaka kwenda kuchukua investment yako anakuambia lakini ukumbuke kuna impairment so far. So you reduce. So impairments will reduce your investment in the company. Was this investment in Amua impaired? Yes. Just tell me the note. So less impairment. loss, less impairment loss, was mentioned in which notes? Note number 4. Please, let's go to note 4. Let us go to note 4. Impairment test performed on 30th April 2023 revealed that goodwill on acquisition of Shiva Limited had not been impaired. That is okay. But due to the declining sales of Amua Limited, the value of investment in Amua had been impaired to the extent of 2 million. So this one was impaired to the extent of 2 million. So impairment will reduce what we have in that company. So what remains is the value of investment. How much is that? $22,600. Thank you. $22,600. How many marks? 4. Those are 4 marks. So 4 marks is 1, 2, 3. 1, 2, 3. Any 2 times 2. 4. So hiyo pia ukikuwa upate yote. Student mwenye alikuwa amechanganyikiwa kidogo anafaa apate ya kwanza 24 na pia apate impairment. Mwenye aliona hii, well and good. Alright, now we are going to consolidation. C. Prepare a consolidated statement of financial position for Pika Group as at 30th April 2023. So they want us to prepare consolidated balance sheet. We have no option but to prepare. So I want to delete this. So right there, Pika Group. Consolidated statement of financial position as at 30th April 2023. As people are more than ready to start. So consolidation, I was waiting for Teresa to log back. So consolidation means you bring them together as one. You combine them this way. So that combination is what we call consolidation. So as you consolidate, you check for adjustments which are required. There we go. So you copy, unaona hiyo yao, unashikilia hiyo yao, you just move with their balance sheet, but now you consolidate. So non-current assets Non-current assets, we have property, plant, and equipments. Property, plant, and equipments. Listen to me and listen carefully. The subsidiary was acquired within the year. If you are to prepare P&L, Marianne, I'm trying to check what you're saying. If you are to prepare profit account, income and expenses of the subsidiary, you only apportion. You only apportion after acquisition. So income and expenses is time apportioned. If the subsidiary is acquired within the year, like in this case, subsidiary was only 6 months. So if I was to prepare profit account, though it was not required here, you take income and expenses of the subsidiary times 6 months. You take 6 months, 6 months, 6 months. Balance sheet is never apportioned. You don't apportion the balance sheet regardless of the date of acquisition. Even if the subsidiary was acquired today in the morning, you don't apportion the assets and liabilities. Utakataje motor vehicle for 6 months. It won't make sense. So balance sheet is never apportioned regardless of the date of acquisition. Profit account, you apportion in case the subsidiary was acquired within the year. Like in this case, it was acquired in May. So May to November, it's May to November or April. We saw 6 months. So you'll have taken 6/12. But I believe we will get to such question. So allow me to check, Marianne. On the first part of the question, it states Pika Limited did not record the share issue. That this not affect goodwill. So they did not record and we have recorded for them. Marianne. So now our computation now is the recording itself. They did not record. Now we have recorded by doing the computation. And affected goodwill because we computed in goodwill determination. So yes, they did not record. So us computing means we are recording it. I hope, Marianne, that is quite clear. So we go to the computation. PP 135. So 135 plus 100, 400. But there is something I want to add. What do you think that is? There is reflection. There is something I want to add. What do you think it can be? I've consolidated the two. You know, consolidation is bringing them together, this plus this. But there is something I need to top up. What do you think this could be? I just want to see whether you can see it. There is something I want us to subtract. There is something.
Depreciation.
Then?
Depreciation.
Who is talking? I can't even see who is talking. Oh, Maria? Yes, depreciation is there.
Depreciation.
But now you say, I agree with you, even Dan, you are saying depreciation. But you see, depreciation we can't add. We are going to subtract depreciation after adding. There is something we need to add, then we subtract depreciation. What could this be? Unrealized profit haiwezi kuja kwa goodwill, haiwezi kuja kwa PPE. Goodwill haiwezi kuja kwa this property, plant and equipment. Correct, Brian. Revaluation. Revaluation is what you add. Yeah, I wanted to see how you will come up until we get it. So we add revaluation. When assets increases value, you top up revaluation. So bring revaluation, then subtract that depreciation. I hope that is clear. So revaluation was mentioned. Revaluation was mentioned in note number 1 to be 10 million. So add 10 million minus, now the depreciation you are saying. They said that the plant had a remaining useful life of 10 years at the date of acquisition. So you will subtract 10 million divided by 10 years. So the answer you are getting when you take 10 divided by 10 is depreciation per year. But the subsidiary is only 6 months old. So 6/12. So this one here is the depreciation. So tell me what you are getting. obey the brackets. So, but 10 divided by 10 is 1,000. 1,000 times 6 over 12 is 500. So it's this plus this minus 500. Give me your answer. And indicate in your books, this is revaluation, this is depreciation. 10 divided by 10 is per year. Subsidiary is only 6 months old. So how much do you get? Brian, can someone confirm? People are getting 244, 900. Confirmed by mail, 244, 244, 900. Thank you. Followed by investments. Shiba Limited. Kumbe tulipewa hizi investment hapa. Hebu angalia wewe computer and goodwill. Hiyo ni tulipata 78 and the other one was 24. Were these the figures we got when we valued the shares? Lakini singetaka ningechukua hapa ningewapeleka shortcut. So ingekuwa mbaya if we have not been given. Oh yeah, Brian confirms. Those are the figures we got. So tungeingia kwa direct, but my fear is even good we went that direction because okay, a student angekuja pick these figures, there is no problem. But my worry is in another question where they just give you that narration of shares, but they fail to give you these figures here. So you need to know how to compute them if you have not been given. So investment in Shiba, when you invest in one of your own, that is called internal investment. You don't bring it in group. What you invest in subsidiary, you don't bring in the consolidation. You replace it with goodwill. So instead of bringing investment in the subsidiary, you substitute that investment with goodwill. So goodwill, we computed. How much was our goodwill? I've forgotten about the figure. How much was the goodwill? Somebody. How much was the goodwill?
22,600.
22.
600.
22,600. Give us here. Goodwill was, huh? Why are you saying a wrong figure? 40. It was 40,600. 22 megawatt. 40,600. Good. You have seen where you went wrong. There was also investment in Amua. Investment in Amua initially, yes, it was 24, but we adjusted that investment. So can you check the adjusted? It was all required part B. So investment in associates. In associates. It was our B. How much was it? It is the 22, Rama. The investment in associates? Olive? Yes. 22,600. Add the non-current assets. So how much? 308, 308, 100, confirmed. 308, 100. Thank you. We are going to current assets. Fuata tu hiyo yao, utoki nje, hiyo yao yenye umetupatia ndio tuko tu hapo. So current assets, inventory. Inventory, stock. You will take 28,400 plus 12,100 minus, though hapo takuwa nimewafika kidogo, lakini ile tu kujua kujoga. What do you think we should subtract from inventory? There is something we normally subtract in group accounting from inventory. What do you think it could be? What do you think it can be? Stock. There is something we need to subtract from stock. Correct, correct. So, Dan and Miriam, your answers are correct. Dan says UPI, the unrealized profit on inventory. Miriam says goods in transit. I agree. So when you check note number, goods in transit are very rare, but here it is there. Check note 2, additional information number 2. Additional information number 2. On 28th April, Shiba Limited sent goods at an invoice price of 7 million to Pika, which Pika Limited neither received nor recorded until 5th May 2023. You see, we are closing in April. Those people received goods in May. So it means by the time we are closing, these goods have not arrived the other side. So those are called goods in transit. In transit means they have left this side, they have not reached the other side, they are hanging. So by extension, you need to add back the goods in transit, add the goods in transit, because if you don't add them back, group itapoteza. Dilishatoka huku asijafika huko kwingine. So you need to subtract. You need to add back, then subtract the profit you are expecting in these goods. Subtract the profit you are expecting in these goods. So what was the profit? Shiba Limited had marked up these goods by 25%. So have an outside working, have a working somewhere, you call it UPI. UPI is the unrealized profit on inventory. So on these goods which were in transit, the entire profit which was there has not been realized. So you say it will be 25%. Remember, 25 is 25 over 100, but that is markup. Yeah, this is markup. 25% on cost. When they say on cost, profit on cost is markup. But to get UPI, you don't take markup. You need to take, we don't consider markup when determining UPI. Instead, we need to take what? What are we supposed to take, Olive? Margin. Correct. So if the markup is 25 over 100, we can take 100. If the markup is 25 over 100, margin will be, what will be our margin? Because we need to convert this to margin. We cannot work with it the way it is. So margin will be 25 over what? Linda? Yes, 25 over 125. This being the first question, I really love what I'm seeing, the response. This is the first question. First question, what now? Mostly what I'm off, but I'm seeing there is, you are really trying. So margin will be 25 over 125 times the goods which were in transit, the 7. So that is the unrealized profit. So can you multiply and tell me how much is the unrealized profit? Olive, 1400. Thank you. So inside the 7, there was 1400 profits, not realized. Sure. So you can even indicate in your books, UPI, this is the unrealized profit. So we take this plus this plus 7 goods in transit minus the unrealized profit. How much do we get? As you give me the figure 46,100, as you give me the figure 46,100, can someone tell me which class do you normally have in the early morning class on Tuesday and Wednesday? Which class do you normally have?
Tuesday we have FM.
FM, eh?
Yes.
Okay. On which day? FM
Tuesday.
net company law. Okay. So I'm still not sure, but from my calendar, on my 24th November, we have a SPAC meeting, which of course is in post, so it might interfere with my class. So in case I'm sure I'll be going, I'll talk to either FM, because I'm free on Tuesday and Wednesday early morning. So nitaongea na mwalimu FM ama wa company law. They give me one class, then they will compensate when I'm not there. Just in case I'm not confirmed. 24th, that is valid. All right, next. Receivables. Receivables. Thinking begins after you have added the two. Thinking begins after you have added the two. That is 27,500. Leo Christian na kuna huyu mtu anajiita Oko, you are really struggling. I will share for you the recording. Kama unasumbuka sana, just ile kidogo unapata, but I'll give you the recording. So 27,500 plus 19,900. Listen now. When you invoice a customer, what is always the double entry? When you invoice a customer, you credit sales account, then you debit trade receivables. So when who sold? Check note 2. Shiba. When Shiba sold to Pika, nalisema ukisikia imeitwa Shiba and Shiba are one and the same. So Shiba, when Shiba sold to Pika, waliweka kwa receivables. Because ukitumia mtu invoice for documentation back in the office, you have credited sales and also you have debited receivables account. Then these goods have remained as jafika huko. So the best to do, toa hiyo deni hapa. Usiende kudai hao watu na hata goods hawajapokea. So I don't know, I saw where some people subtracting or adding goods in transit to payables. No. Goods in transit, you are, when you give the goods, see, driver amebeba invoice. It means you have already invoiced this customer. So the customer here is Pika. But Pika has not even received nor recorded those goods. So remove from their receivables account. So subtract the entire amount, this 7, the 7 which is in transit. They are invoiced them at 7. So remove the whole amount. So goods in transit, you add back to stock, then subtract the receivables. Check note number, there's a note I saw. Sorry, the small note before note 3. The small note before note 3. The small note before note 3. The agreed trade payables recorded in the books of Pika Limited before the above transaction was 6 million. So before the 7, they had payables of 6 million. Payables means they were supposed to pay Shiba 6 million. During consolidation, whatever you are owing each other, you know, group is like, not like it's a family. So uwezi kuwa na deni ya maybe your brother or your mother or your dad, then unakuja kutuambia unajua babangu anakuanga na deni yangu mingi sana. Hapana, those are internal affairs. So any intergroup debt, payables and receivables, you subtract it in receivables and also down there as payables. So subtract the 6 million like that. That intergroup debt must be eliminated. So this is GIT. GIT is goods in transit. This is intergroup debts. So when I go to payables, I will also subtract these 6. This one here. Chapa hiyo. Nipatie answer. $34,400. Thank you. 34,400. We proceed. We proceed. Cash and cash equivalents. Where watana kizungumika andika cash. Cash is enough. So cash 10,600 plus 68 plus CIT. CIT was not here. CIT stands for what in full? What school do you think CIT can stand for? What could CIT be standing for? Marianne, cash in transit, correct. You see, that's them. So if I told there was cash in transit, example nakwambia ndio au walikuwa wamelipa but the amount has not been recorded. The amount in transit, you add it here, but it was not there. So tunaingia to examiner, kama ingalikuwa, we'll have added here. Otherwise, add for me these two. What do you get? How much? How much? Linda, 17,400. Finished. Total assets. Total assets. Total assets. Add from 308,100. From 308,100 to get the total assets. Maria, 406, Linda, 406. 406. That is gone. That is gone. That is gone. Hi. We want to go to equity and liabilities. So write down there, equity and liabilities. Equity and liabilities. Now, hapo kwa equity, listen to me and listen very well. Ordinary share capital and share premium, those two, in any group accounting, we only take for the parent only. Okay, I'll tell you the reason as to why. Let us start with your reason. You just take parent only. The reason is because parents ordinary share capital of the subsidiary, when we're calculating goodwill, we took it, yote, in full for the subsidiary. So parents took their share, minority took their share. It was considered in full in goodwill computation. Goodwill due assets. So if you bring those shares down here, you'll have done double posting. So that is the explanation. It is shared between minority and the majority. Majority is the parent. So we don't bring ordinary of the subsidiary during consolidation. That is the explanation. I'm starting to check at the explanation. Where you are living. During consolidation, ordinary share capital which goes to the balance sheet is only for the parent. You inakwanga free tick. So ordinary and share premium only parent. But swali yetu, whichever. In our question, hii ndio ngumu kidogo. Hizo zingine zitakuwa rahisi. In this one, what I noted, parents gave out some shares. Some of their shares, they were giving 3 for every 5. So when you give out your shares, it means the shares of the parent will go up. So have an outside working. I want us to do some small workings. Parents shares issued to acquire Shiba. Parent shares issued to acquire Shiba. So I was just supposed to go to the equity in your question paper. In the consolidation, we were just supposed to take that 160 you are seeing there. In a normal, we would have just taken 160. But in this question, they said that these people issued 3 for every 5 acquired, and we acquired 75% of this one here. Yes. So how many shares did we issue? How many shares are those? Those are the shares parents gave out to acquire that company. They gave them 3 for every 5, but they acquired 75% of this. So how many shares are those? These are in form of shares. So how many? How many shares? Ladies and gentlemen, how many shares? Done. And the rest, 3,600 shares. Alright. Now, to ordinary share capital, you will take 36 times shillings 10. That is 36,000. You know, the par value was 10. But these shares were given at shillings 13, if you can remember. They were given at 13. In the ordinary share capital, you don't record above the par value. That is accounting rule. In the ordinary share capital, you don't exceed the par value. In case they gave them at a figure higher than the par value, like in this one, they gave them at 13, then that excess of 3 should go where? Where do we take the 3? So the par value is 10, but they gave at 3. So the excess of 3, tutatafuta mali tutapeleka. Where should we take the excess? The 3, the shillings 3. Goodwill. Hapana Brian. Hapo mniangusha kidogo. Where do we take excess value of the shares? When you give, nikienda sana ndawapea answer. They issued at 13 when par value is 10. So the excess of the par value, hiyo hata inaingia kwa law. Hiyo kitu inataka ni mambo ya company law hapo. Where do you think we should take the excess amount? Mtu anaipata tu sahi, I know. Ukifikiria kidogo tu. Brand is enda kwa Goodwill. Goodwill, you take the whole amount they paid. They paid 13. Huko utapeleka yote, what they paid. But for share capital, you don't exceed the par value. Where should we take the excess? Imagine ni answer unajua. Hata nikisema utasema kumbe ni hiyo tu kitu najua. I give you 30 seconds. So to avoid time wasted, when you issue shares above the par value, the excess amount is called share premium. So now that we're gonna do. So this is 2. Share premium. The share premium, you take 36, but premium will take shillings 3. We'll take shillings 3. So what is 36 times 3? What is 36 times 3?
$108.
108. 108 what? Wait. 10,800. No. 3600 by 3. Nani asema answer kipotea? 10,800 only. We were 10,800, not 108. So let's go back to our presentation. Ordinary shares. So ordinary shares, parent only. You only take for parent, which is 160 plus the 36. That is 196. That is 196. Then it was followed by retained earnings, but before retained earnings, bring share premium. Share premium was not there before. So you just take the 10,800. Hapo najua ilifika watu wengine changa kidogo. Ndio hiyo nimewaambia. Haya. We have 2 critical workings which we can't even escape. But in an exam you can leave them, but with your time. We need the retained earnings. So right here, we need retained earnings for the group, and also we need non-controlling interest. Those 2. Those are serious issues, but we don't have option. I would want us to solve. We don't have any option, but to go about it. So how are we working again? Hapo nje, retained earnings. I normally call it RE to stand for retained earnings. Chapter. So check retained earnings for the parents. So parents, Pika. Their retained earnings is 62,400. Check the balance sheet. Plus 21,700. How much is that? When you add the 2, you should bring the total retained earnings. So can you add the 2? Add the 2. Add the 2, add the 2, add the 2. You get 84,100. 84,100. Then you add post-acquisition profits. For the investee companies, that is subsidiary and associate, You only take the profit which came after you acquired them, not before, only after. So we have here Shiba. Shiba iko hivi. For the whole year, check the balance sheet. Check the balance sheet. Retained earnings for the year. For the year, they made 10,800 here. Ile tulikuwa tumeangalia before. So they were acquired somewhere here. This is where they were acquired, in between. So parent, during consolidation, parent will only take the profit which came after acquisition, from here to here. Here was 6 months. 10,800 is for the whole year. So you will take, parent will take 75% of 10,800, but for 6 months, 6 over 12. Post acquisition, what they made after you acquired them, you don't take before, after. The profit a company has made after acquisition. So from here to here. What will you get? But you take 75, not everything. 75%. $40.50. So this is $40.50. Then Amua Associates, 30%. Amua, they made a profit of how much in note number 5? It was a profit of 4. Of 4, also for 6 months. Amua was also 6 months old. So parents will take the profit from that. You only take post-acquisition. Post-acquisition means after. You only take in the books the profit you made in those companies after acquisition. So this one will be how much? Somebody? Time imeanza kunifinya kidogo, 14 minutes. 14 ama 12. But when you retain earnings na NCI, then we are good to go. Go muna kaka bila kunipea answers. 600. There are some items we need to subtract. One, there was depreciation. So less depreciation. Depreciation, I remember, it was 10 divided by 10 years. Times 6 over 12. But depreciation was in the books of Shiba. Yeah, depreciation was in the books of Shiba, and therefore parent will take 75%. So give me that figure. Give us that figure. How much will it be? 10,000 by 10 is 1,000, times 6 over 12 is 500. 75% of 500 need 375. What is 375? That one you subtract. Also, there was unrealized profits. There was UPI. UPI, I remember, it was 25 over 125 times the 7,000, but parent 75%. Retained earnings is always for the parents. Your minority wataangalia yao baadaye. So, how much? How much will that be? How much will that one be? $10.50. $10.50. Then you less impairment. Impairment in associates. Impairment you don't apportion because our investment is the one which had suffered impairment. It suffered an impairment of 2 million. So you subtract the whole amount, 2 million. So group retained earnings will be the adjusted value. Can you adjust it for me? Remember, we can't leave this question hanging. We have 10 minutes, but only one working remaining NCI, then we complete the presentation. So can you give me the correct value for the retained earnings. Chap chap. Chapa hiyo. From 84,100, you adjust. Marianne is getting 84,725. Confirmation. So there's a difference. Brian is saying 85,325. So which is which? Someone to confirm so that we clear the air between the two. 84,725 and 85,325. Which is which? Olive 88. Where? Three different answers. Dan 85,325. So you're done. I will get the same. One person to confirm. So Dan and Brian are the same. Marianne 85,325. So 85,325 confirmed by 3. 85,325. So bring it here to the retained earnings. 85,325. So just check, maybe somewhere you went wrong. The last working, do it outside there. I will do it here, then I have NCI's equity. Equity of minority. If you don't tell them the equity, they will give you problems. Takusumbua. Watakwambia tumekubali tu sisi ni wachache kwa hii kampuni, lakini haki yetu lazima hata sisi tupewe. So you must tell them also what is due to them. So you start with their fair value on acquisition. What was the fair value of minority at acquisition? Check where we calculated goodwill. Pale A. Where we calculated goodwill. What was the fair value of minority? Though I remember how we calculated. It was 25% of the shares. Shares was 80/10 times the market value was 12. But we got it, Pale A, where the first working we did. How much was it? Brian, 24,000. Yeah, it was something like that. 24,000. So when we started, or when we acquired this company, minority, what was due to them in that company was 24. So anything which will come after, you will give them 25%. Shiba made a profit of 10,800 times 6/12 after acquisition. Parent took 75. Minority will go with 25%. So post-acquisition profit, 25% of 10,800 times 6/12. How much is that? So profit which came after, they will take 25. Parent took 75%. So how much will that be? 1350, Marianne. You add to them. Less depreciation. Depreciation, they are going to share 10,000 for 10 years times 6/12. Minority will go with 25%. Parent took 75. How much? 10/10. It is 125. Confirm? 125. Yes, 125. But the last one is UPI. So unrealized profit, they are also liable. 25/125 times 7 by 25%. How much will that be? 350 or thereabouts? Because I remember it was 1400 with 50. Confirm. Yes. So this is 350. Done. So this is the capital of minority. We have given them profit apart from the fair value. We have subtracted depreciation and DPI. This is to be from without wasting time for no reason. So give me the consolidated that one. LCI. It will be how much? 24 plus 1,000 is 25,000. 25,000 minus 125. That is 24,900. 24,825. 875. Sour. So that is 24 according to that there. 24,875 confirm. So Brian, 24,875. Can you add for me equity? Equity is done. Equity is over. So the rest are walkover. Yes. Equity is walkover. The rest are walkover. Hapo kwa equity ndio kuna kwanga na taswishi. Give me the total of equity. I want to have this. Give me the total of equity. Brian, 317 confirmed. So this is 317. Correct. So let's go to non-current liabilities down here. Non-current liabilities. We'll go back to the question. Non-current liabilities, there is 12% loan notes. 10% bank loan. 10% bank loan. 25 plus 10. 25 plus 10. That is 35. Deferred tax. Deferred tax is 3,700 plus 31. That is 68. The couple. Then we go to current liabilities as we finish. Current liabilities as we finish. Current liabilities, we have payables. Payables, 28,800 plus 21,200 minus intergroup debts, excluding goods in transit. Goods in transit was 7. That one we don't bring it here because our work on is of goods go here. So what you need to subtract is the 6. Yeah, the 6 was the intergroup debt. 44 Olive. Olive 44. Yes, 50 minus 6, correct. Then the last one, current tax. 1,900 plus 13. How much is that? 19 plus 13 is 32. That should be 3,200. Therefore, total equity and liabilities. Total equity and liabilities can you add from 317? I have to go on time. Can you add the total equity and liabilities? Uh, 406,000. Is that, it is balancing with our total assets? I don't have my total assets here. It is balancing with the, yes, confirm?
Yes.
Okay.
Yes.
So that is how that question was supposed to be done. How many marks for the balance sheet? 12. You only required 6. 6 correct ticks. Any 6 at 2. So 6, you are to get here without struggling. 1, 2. 1, 2, 3. Then Google assets, do which ones? In the assets, which ones were movable? Which ones were easy to get? In the assets side. You know, I don't have the assets. Which ones were, or I can check. In the assets, the ones students were supposed to get without struggling, cash. There was cash. There was cash. Then, by the time unaenda kwa mtihani, I know, inventory mtapata, hata hiyo PPE, you will get it, I know. So you end up getting everything there. So that question is done. The next question for our next class, is April. We'll revert back. We'll check April 2023, question 2, page 8. Hata unaweza relax now, uangalia pole pole. We'll do it in our next class. Remember, nimepanga schedule. A miss of even one class is dangerous for us. So you can try before the class, then we could jump out to Taifani. Otherwise, have a nice day, and I wish you a good week ahead as we start the week. Thank you. You can log out. I'll share the recording. Good day to Olive. I hope everyone has. So.